Good morning. This is Bloomberg Daybreak Europe. I'm Joanna Bersetchi in Dubai, and these are the stories that set your agenda. Global stocks gain on easing trade war fears as Presidents Donald Trump and Xi Jinping are set to meet on Thursday. But the loonie falls as Trump ends talks with Canada. Investors now look ahead to delayed inflation data from the U.S. EU leaders put off making a decision on using frozen Russian assets to help Ukraine fund the war. Plus, Intel soars as it returns to profitability. We'll have Sanofi third quarter earnings this hour, while NatWest reports later. Well, good morning again, everybody. If you're just waking up, markets are trading in the green. We are ending the week on a positive note, it would seem. Judging by the amount of green on the screen, as you can see, all of these futures are pointing towards positive. European markets up 0.2%, and U.S. markets, after positive close yesterday as well, up a similar amount. NASDAQ up 0.3%, reacting to some of the positive results coming through on Intel. We're going to talk about that through the show, but also bigger picture, some of those easing tensions between U.S. and China, with a date now confirmed for President Trump to meet with Xi Jinping on Thursday of next week. So perhaps some positive sentiment going into that meeting. Switching over, let's take a look at some of the cross-asset performance today as well. And you can see that the handover from Asian markets is mostly positive too, up 0.5%, an upbeat mood there. We're talking about some of the reaction to the plenum that took place this week, the focus on tech firms, China tech, the self-reliance in technology. Again, a big theme over there, and that's playing out. So we're going to talk more about that shortly. 10-year yields in the U.S. still sitting below 4%, 3.99, just a smidge. But attention today will turn to that CPI data and whether there is an upside surprise. If it does happen, then we won't be below 4% for long, maybe. But that is where we are right now. And keeping a close eye on Brent, a massive day for the energy complex yesterday after the Trump administration applied sanctions on those Russian producers. Oil was up 5% for the week, up 5% as well. But today, sort of stabilizing around this level, just shy of $66. And then gold has somewhat recovered from the sell-off that we had earlier on in the week. Now we are marked at around 4,114, still not back up at those record highs. But at one point, we were getting close to $4,000 again, stabilizing for gold. Okay, let's talk more about how some of those Asian markets are faring with Winnie Su in Hong Kong. Winnie, I mentioned that the handover from Asia-Pacific markets has been quite positive. Just walk us through exactly what the reaction has been to what we learned out of the China plenum this week.
Yeah, exactly. We are seeing that relief rally in Asian stocks today, and that's, again, like you mentioned, driven by that easing tension between U.S. and China. And we're seeing that the gauge is up, slightly less than 1%. So we're ending the week in the green, which is coming off from 2 weeks of declines already. So earlier this morning, it's that confirmation with the White House saying that the Trump-Xi meeting will be happening next week. So that was helping the gauge to trend higher. But the momentum actually slowed down a little bit after Trump said that he is terminating all trade deals with Canada. So you can see how there are still these uncertainties when it comes to the trade talks. However, we take a look at what's going on in Japanese stocks because the overall benchmark is higher, and that's really helped by the technology shares. You see on the screen that Advantest, so one of Intel's key suppliers, is actually also surging here after the U.S. chipmakers said that they had a upbeat forecast when it comes to the sales. So that is overall helping risk sentiment. But we also want to highlight here is the moves in the Japanese yen, because it's been weakening for 6 sessions already, taking it to the weakest against the dollar in 2 weeks. So that's still really on the concerns around the fiscal expansion from Prime Minister Takaichi. Now, all eyes are again on China, like we just discussed, because we are wrapping up with the fourth plenum, and we are seeing that Chinese stocks slightly higher, but it's not really too much when you compare that with the overall gains in the region. And that's because, yes, we are hearing that the plenum was focusing a lot on the tech reliance, and hence these AI chip names in China are surging, but not too much when it comes to boosting the consumption. So really still, we're watching how much of more further details we are going to expect from the plenum.
Yeah, really strong reaction, as you can see in some of those chips and AI names. Winnie Su in Hong Kong, thank you so much. Now, President Trump says he wants to extend a pause on higher tariffs on China ahead of a pivotal planned meeting with counterpart Xi Jinping on Thursday. In return, Trump wants Beijing to resume American soybean purchases, back off rare earth export curbs, and crack down on fentanyl.
Actually, on November 1st, the tariff on China goes to 157%, which is record-setting territory. And we don't want that because it's not sustainable for them. They can't sustain that. We don't want them to have to go through that. So I'm meeting with President Xi, and I would say we have some big issues, like with the farmers and various other things. But the first question I'm going to be asking him about is fentanyl.
Let's cross out to Bloomberg's China correspondent Min Lo, who's in Shanghai. So President Trump clearly has his wish list, his shopping list of what he wants to get out of President Xi at this meeting. The big question is, who has the bargaining chips right now, the U.S. or China?
Well, it's hard to say, but President Trump certainly is asking for a lot in exchange for pausing tariffs. He wants China to buy U.S. soybeans, he wants action on fentanyl, and he wants China to loosen those export restrictions on rare earths. But when you think about rare earths, that's really a critical strategic advantage that China has. It's not simply a bargaining chip. So analysts don't see China as being too amenable to loosening or undoing some of the recent announcements on rare earth export controls. And similarly, in exchange for such a big reversal, China would want an equally a big concession from the U.S., and that would be loosening those tech curbs. But again, that would also be something that is somewhat politically untenable for President Trump in Washington as well. So with these two sides really having a long list of issues that are remaining as sticking points so far, analysts believe that maybe expectations are not too high at the moment. They're expecting the two sides to continue speaking, using this as an opportunity to dial down tension and maybe agreeing to more talks and extending of that trade truce. But whether or not we get a sweeping trade deal, a sort of grand bargain, I think expectations for that is pretty low at this point.
Yeah, and it's not just U.S. who've been watching these latest moves out of China. Obviously, Europe as well, looking to find solutions to China's stronghold on critical rare earths. What are they proposing?
Yes, the EU summit is happening in Brussels, and from what our sources are telling Bloomberg, Emmanuel Macron has been calling his other EU counterparts to take the strongest measure against China when it comes to rare earths, and that means pulling out that anti-coercion tool. It's a legal tool that the EU created back during Trump's first term. It provides them a tool through a qualified majority vote to impose actions ranging from trade actions, financial capital controls, for example, limiting China's access to public procurement or to EU funding, for example. But of course, if the EU does decide to do that, it represents a major escalation of tension, and it really puts China at a critical juncture. They are at risk of having to fight a multi-pronged trade war with both the EU and the US. So the EU trade chief has said they don't want to escalate this, but the current situation, they said, is unacceptable. And that's because Chinese rare earths have critical implications across many different sectors, right? From EV batteries to consumer electronics, defense manufacturing. They are needed in chip production as well. Those lithography machines require rare earths as well. And so the warnings that, with the disruption, we could see factory shutdowns within weeks. And that's why time is of the essence, and both sides are looking to find a diplomatic solution. But the EU is still preparing some options by the end of the month to increase their negotiating leverage.
Bloomberg's China correspondent Min Lo walking us through all of what we should expect out of that upcoming meeting, and of course how the EU are thinking about rare earths as well. Thank you. Now, U.S. trade negotiations with one of its neighbors has been thrust into chaos after President Trump announced he's immediately severing talks with Canada. Posting the announcement on Truth Social, Trump called Canada's behavior egregious. He's taken issue with a tariff ad featuring the voice of former President Ronald Reagan. Bloomberg's Balash Pence joins me now from Hong Kong. Just walk us through what pushed Trump over the edge here. What was in the ad that rattled him so much?
Yes, good morning, Joanna. This does seem like this ad really infuriated the president. This is an ad that the government of Ontario put out. It features Ronald Reagan talking about the potential negative impact of tariffs and what the government of Ontario, which is one of the hearts of Canadian industry, was intending to do is to target Republican areas in the U.S. to try to kind of sway Republican voters, the key constituency for Donald Trump, to convince them that tariffs may not be the greatest thing in the world. This is obviously something that really hurt their economy locally. And if we zoom out a little bit, this is just a reminder of just how rocky the relationship with Canada has been ever since Trump returned to the White House. And even though there has been a sense of stabilization recently and talks have been happening. Mark Carney was in the White House a couple of weeks ago, and that meeting seems to have gone well. That really important trade relationship, which is worth almost $1 trillion a year, is still very uncertain. And while the two leaders will both be in Korea this next week, they might have a chance to discuss this issue. It doesn't look like there's anything immediate planned, so there are a lot of questions that remain about the Canadian economy.
Yeah, we'll see whether Mark Carney can actually smooth that one over by the time they meet at APEC. Bloomberg's Balash Pants in Hong Kong. Thank you so much. Well, speaking of prime ministers, let me just bring you some lines that are crossing now. The new Japanese prime minister, Takaichi, has been speaking in a diet in the parliament. And some interesting lines actually relevant to anyone who's been tracking JGB yields, the performance of the currency. She's saying that expansive fiscal policy will be strategic and responsible. They look to lower the debt to GDP ratio to maintain market trust and seek to increase government revenue without raising taxes. So that one probably is a line that she's throwing to her coalition partners. But I think the line about expansive fiscal policy being strategic and responsible is also one directed at some of the market participants who've been selling JGBs in anticipation of very expansionary fiscal policy. If you look at the performance, say, of 30-year JGBs since April, we're up almost 100 basis points. And we've started to move back now. The last couple of weeks have actually been quite supportive for JGBs, maybe a case of buy the rumor, sell the fact. But you can see now that the language coming out of the Prime Minister, keenly awaited comments, of course, vis-a-vis how she's thinking about the economy, is supportive for those who believe that maybe she's not going to spend an unlimited amount of money on fiscal easing. So what we're seeing now is the yen weakening slightly as she speaks, and JGBs have continued to recover about 2-3 basis points lower on the day. Well, this month's rally in treasuries could be spoiled as U.S. inflation data for September is published 9 days later than planned. Let's get more from Bloomberg's Valerie Teitel. So we're finally getting data, Val. We've got something to watch out for today. What is in the cards? What are people expecting out of this print?
Well, essentially, this print, Jumana, could show evidence that we are moving farther away from the Fed's 2% target. We have core CPI month on month expected to come in at 0.3%, essentially bang in line with where we were last month. But that 0.3 reading does take us further away from the Fed's target. But there's a lot of things to watch in this report. The three key things to my mind are the tariff pass through. Will there be evidence that these companies are being successful in passing on higher costs to consumers, or could there be evidence that perhaps the consumer isn't necessarily paying up for higher prices and they're having to offer discounts? There is still a lot to be discussed and a lot to be worked out about tariff pass-through questions. Perhaps this report might show us evidence one way or the other. Another thing to watch, Jumana, is housing rent inflation. Now, this is something that is quite key because it is a large component of core CPI, and we're seeing more high-frequency data reflecting weakness across rents. The last thing to watch is data quality. Now, while this CPI release was the data was all taken before the shutdown, there is still questions moving forward. If we do have to skip the next month's CPI, it could lead to higher imputations from the BLS, and that could lead to lasting effects on the CPI reading. Our own Bloomberg economist, Anna Wong, thinks that if there's a higher increase of imputations because of a skipped CPI, it could cause data distortions all the way out until May of next year. But this is really to keep in mind that we've had a decent Treasury rally for the month of October. Those 10-year yields are now still hovering below the 4% level when it comes to the U.S. 10-year. Now, a hot print today could perhaps break this trend.
Yeah, most definitely. And also really interesting to see the longer-term impacts of the shutdown disruption, how that could impact the data in coming months. Bloomberg's Valerie Teitel, thank you so much. Well, she just gave us a little bit of a preview of what's coming up today. Obviously, the CPI print in the U.S. is going to be a major one. But at 7 a.m. UK, you want to watch out for retail sales figures. So that will give us a test of how consumer spending has held up throughout the last month and tends to be quite volatile, as you can see. But that number comes out at 7 in the morning. Later on, 8:15 a.m., from 8:15 a.m., we start getting some of those European PMIs, kicking off with France first. So a slight uptick is expected for France. Keep an eye out on Germany as well, where slight moderation is coming through, but still above that 50 mark. And then the euro area as a whole, not expected to see a lot of movement. So watch out for that. And then US CPI, as Val was just walking us through, and expectations there. So we're finally getting that data. And of course, as ever, you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB. So that's DayB Go on the terminal. The top stories today, well, we've covered a lot of them. We're talking about the loonie falling after Trump ending the Canada trade talks, Trump meeting Xi, and another one we will be talking about later on the show, Intel shares, the big rally after their earnings came through. All right, coming up, EU leaders waver as the Ukrainian president calls on them to tap into frozen Russian assets to help him fight the war. Plus, Intel soars in late trading after returning to profitability. We'll have more on that later. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. EU Defense Commissioner Andreas Kubilius is calling for Europe to use funds from its 150 billion euro investment plan for the bloc's defense industry to help Ukraine. The Defense Commissioner says some countries are ready to also use loans from the so-called Security for Europe program for Kyiv. He spoke to us on the sidelines of the Berlin Global Dialogue.
Of course, the question is if that will be enough to convince Putin that he needs to sit down and to discuss, ceasefire and peace agreement. Always we're expecting that some rationality on the Russian side will come, because definitely it's very clear that they cannot achieve any kind of victories in this war. But again, we don't know how Putin in general will react. From another side, I think that it's very important that we as Europeans, we should have our own strategy, related very much with what President Trump is doing, but also, not just waiting that President Trump will bring peace, but to have our own strategy, what we need to do. And I think that from that point of view, very important decision can be on so-called reparation loan. Using those frozen assets without confiscation, but using frozen assets to send to Ukraine 150 billion euros, which can be used for defense. And maybe that could be a signal to Putin where he will start to understand that he really will not achieve anything in Ukraine.
On those 150 billion euros assets, since you bring up the Russian assets, do you think that there's going to be movement on that this year? Do you think that could happen by the end of the year? And following up on that, should there be a buy European clause on some of that?
I hope that, first of all, that it will happen, that that loan will be arranged. Very important decisions can be made in the forthcoming Council of the Heads of States. And in the roadmap, which we passed last week as Commission decision on so-called defense readiness roadmap, we put also our, expectation that the loan will be given to Ukraine at the end of this year. So that is one thing. Second, how the loan will be used, that will, of course, will be discussed. We know different, opinions. I would like to see that Ukrainians would have, of course, in the discussion with European Union member states, but would have, some kind of ability to decide what is a priority for them.
That was the EU Defense Commissioner speaking to Bloomberg's Oliver Crook. Now, the EU is delaying a decision on whether to tap into frozen Russian assets to further aid Ukraine. That's after talks stalled as Belgium demands greater assurances that it won't be liable for risks tied to the financing. European Commission President Ursula von der Leyen says that member countries broadly supported using the assets.
We had a good discussion on the reparations loan to be financed with immobilized Russian assets, and it allowed us to identify points we still need to clarify, and then indeed we will come back with the different options that we will develop. Let me underline again, we will always respect European and international law while we are taking this work forward that we've just described.
Bloomberg's Tony Halpin joins me now. Well, it's been a tough week for President Zelensky. He went to D.C. to secure those Tomahawk missiles from President Trump, isn't getting them. Doesn't seem like he's going to be getting the funding from the EU either. What is the knock-on effect for his decision-making vis-a-vis, potentially making these land concessions that Russian president has been pushing for?
Yeah, I mean, it's important for Ukraine to get this funding. Zelensky needs that money to help buy weapons and to keep the government functioning, to pay troops, to keep his officials running departments. So, as he said, it's important to get that money so he can use it to buy weapons to defend against the Russian attack. He's also underlined that Ukraine is not willing to recognize any land swaps with Russia. The US has reiterated that it sees some sort of deal there where each side freezes the conflict on the existing lines of battle. And Zelensky is making clear that he's not willing to make a concession, or at least to recognize a concession. There's a slight distinction there in any settlement to this war.
Yeah. Tony, thank you so much. Bloomberg's Tony Halpin there. Thank you. Well, oil is on track for its biggest weekly gain since June after those U.S. sanctions on Russia's two biggest oil producers. Brent is heading back towards $65 a barrel, but it is still up around 7% for the week. Now, coming up, the Reform UK leader Nigel Farage suggests he'd replace the Bank of England governor if he were to become Prime Minister. More on that later in the show. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. And now to some of the other stories making news today. A GfK consumer sentiment survey finds that UK households were more inclined to buy big-ticket items in October than at any point in almost 4 years. And a major purchases index tracking attitudes to buying items such as white goods and furniture has risen to a January 2022 high. The findings suggest consumers are holding up ahead of the November 26 budget, when Chancellor Rachel Reeves is expected to announce more tax increases. British car production plunged 27% last month as a result of the cyberattack that crippled Jaguar Land Rover. JLR is slowly resuming operations after being forced to stop making any vehicles for more than 5 weeks. The shutdown hit hundreds of suppliers and caused chaos among smaller firms that rely on the luxury car maker's business, which led to government intervention. The shuttering has piled more pressure on the UK's beleaguered auto industry. And the FBI has arrested NBA player Terry Rozier and coach Chauncey Billups in two separate illegal betting schemes. Prosecutors say Rozier of the Miami Heat wagered using non-public NBA information. Billups, who's the head coach of the Portland Trailblazers, faces charges in a case tied to a rigged poker games allegedly run by New York mafia families. And coming up later in the show, Eric Trump tells me why he's bullish on Bitcoin and where he thinks it will be by the end of the year. Stay with us for that. This is Bloomberg. This is Bloomberg Daybreak Europe. I'm Giovanna Versace in Dubai, and these are the stories that set your agenda. Global stocks gain on easing trade war fears as Presidents Donald Trump and Xi Jinping are set to meet on Thursday. But the loonie falls as Trump ends talks with Canada. Investors now look ahead to delayed inflation data from the U.S. EU leaders put off making a decision on using frozen Russian assets to help Ukraine fund the war. Plus, Intel soars as it returns to profitability. We'll have Sanofi third quarter earnings in a moment, while NatWest reports later. All right, let's just bring you some of the results that are coming through, starting with Sanofi. So their third quarter business EPS has come in at 2.91. That is versus estimates of 2.65. So that is a beat. They are reiterating their 2025 guidance. Business operating income coming in also higher than estimates at 4.45 billion versus estimates of 4.13 billion. In terms of sales, they are guiding to 3Q sales at constant FX prices of plus 7%. So that's 7% for the quarter. In terms of actual numbers, that's translated to 12.43 billion versus estimates of 12.36 billion. So what we're seeing so far is a beat on sales, a beat on EPS, a beat on operating income, and they're reiterating their 2025 guidance. So you can see the stock, though, is down 7.6% year to date. Let's switch over to the energy space. Eni also reporting this morning as well. So third quarter adjusted net income coming through at 1.25 billion versus estimates of 1.01 billion. So a beat there as well. Adjusted operating profit 2.07 versus 1.89 billion. A beat for that number too. They have raised their 2025 buyback to at least 1.8 billion euros. So that will be a positive signal for investors in the stock. And you can see over the past 3 months, it's actually performed quite well, up more than 8.2%. And then in terms of production, three-quarter production, 1.76 million BOE per day. The estimates were 1.72 million. So again, a beat coming through on top line and bottom line there. And it seems like the stock buyback is being increased as well to at least 1.8 billion euros. Okay, those are earnings, and there is going to continue to be a focus on earnings today. But broadly speaking, we are setting up for a positive day for markets. European futures leaning positive, up 0.2%. We've got FTSE, the relative underperformer, trading flattish. Remember, we have those UK retail sales figures coming up in about half an hour's time. S&P and NASDAQ also leaning towards a more upbeat start to the day. And remember, we have US CPI data to watch out for. We're going to talk about that in a moment. But some data is actually being released despite the fact that the US shutdown continues. And then switching over to cross-asset, as we've been talking about, the handover from Asia Pacific, mostly from these Chinese tech indices, has been pretty positive overnight. The Asia Pacific index at a record up 0.4%. But again, positive reaction to some of the sound bites coming through from the plenum in China over the past few days, with a real focus on self-reliance and technology there, one of the major themes. 10-year yield sitting below 4%. We did back up a little bit in light of the move that we had in oil yesterday. Major move upwards, up 5%. Its best week since June, but still barely recuperating some of the losses that we've seen since September. So $65, basically around the middle of that range that we've been since September. And then gold actually also rebounding as well. We were at $4,000 at some point earlier this week, but we have rebounded back to 4,100, not yet back at the all-time record highs, but again, some stabilization coming through. Now, another big development that we need to talk about this week was the nomination as Takaichi-san to become Japan's next prime minister. And she's actually delivering an inaugural speech as prime minister now. She was just speaking earlier in the parliament. The speech is finished. But in terms of some of the key takeaways, quite relevant for anyone who's been trading these markets, talking about expansive fiscal policy, being strategic and responsible. They will lower debt to GDP ratio to maintain market trust. They will lower debt to GDP ratio. So that's important. In terms of U.S.-Japan, she's spoken about that as well. Want U.S.-Japan ties to reach new heights. She's spoken about vis-a-vis China. Will hold frank talks at summit level with China. It is true that there are security concerns with China as well. And then also goes on to say they will advance mutually beneficial ties with China, but will also seek defense outlays at 2% of GDP by the end of March. They will hit their defense spending goal faster with the extra budget. So she's talking a bit more about defense spending, similar to some of the language coming out of these European nations as well, but also saying that the expansive fiscal policy will be strategic and it will be responsible. And what you've seen is a small pullback in JGB yields. We've turned around a little bit, even in the run-up to her speech this morning. All right, for more on the market action, and there's a lot to talk about today, let's bring in Bloomberg MLive strategist Mark Cranfield. Maybe just, let's pick up a little bit more on what we've heard out of Takaichi-san, especially vis-a-vis the fiscal comments, because the impression into the elections and, for most of the conversations we've been having this week is that she would come in and really push this very expansive fiscal policy, but she seems to be quite cautious this morning.
Yeah, to some extent, although she has said also that she hopes to raise revenue without raising taxes in Japan, which sounds a little bit like wishful thinking, and that's probably partly why the yen has been weakening since she started to speak. She's sounding quite a bit like her mentor, Shinzo Abe, and during his time, the Japanese yen was relatively weak, the stock market was strong, that was a good thing, and there was a lot more spending via the Japanese bond market as well. So she's beginning to look a little bit like that as well. Investors were probably also a little disappointed. The yen has been pretty weak over the past few months, and since he was confirmed as leader of the LDP, it weakened even further. And they were probably hoping that by now she would say something positive and clear in defense of the Japanese currency. She's avoided doing so, and that's probably seen as to the extent that she's not that yet worried that the yen has really reached a point where she needs to do much about it. So from a trader's point of view, she's effectively saying to them, you can continue to short the Japanese yen. I'm not going to stand in your way for now. There will be a pain threshold at some point, but she's not indicating where that is. So providing the US dollar stays relatively firm, as it has been today, the Japanese yen is going to be one of the currencies that weakens quite a bit. We've also got the Canadian dollar in play, of course, because President Trump has cancelled trade talks with Canada. So that's adding to the fuel for the US dollar today as well.
Yeah. OK, so that's the reaction of the US dollar. I mean, more broadly speaking, how are investors responding to this Trump-Xi meeting? We know that it's going to take place on Thursday of this week, in addition to what we learned out of the plenum in the last few days.
There's certainly relief that the meeting appears to be back on. Of course, there's still time to cancel it. There's almost a week to go. It could be back on or back off in that meantime. But for now, yes, of course, there's relief. More importantly, the details coming out about China's 5-year plan is pretty much what Chinese investors expected. There's no unpleasant surprises. China still is committed to boosting the tech sector, doing more for the broader economy. And what we've got used to, particularly since they started doing stimulus in the fourth quarter of last year, is that China's giving more freedom to those companies to develop, to innovate, and to make money. And that's exactly what investors want to hear. They can remember the dark days of COVID-0, when the government appeared to intervene from time to time and make it more difficult for Chinese companies. We don't want to go back to those kind of days. So for now, at least, everybody's on the same page. The Chinese leadership is talking positively about the economy, helping everybody, and investors want to hear exactly that.
Yeah, we've moved away from the days of quote-unquote common prosperity. Bloomberg MLive strategist Mark Cranfield, thank you so much. Well, September data on U.S. consumer prices is slated for release later today, following a 9-day delay due to the ongoing government shutdown. Let's bring in Bloomberg's Valerie Teitel with what we can expect. And I guess one of the mantras that I'm hearing in the market now, Val, is 3%, the new 2% for investors.
Yes, and this report might reinforce the fact that the Fed is re-beginning their cutting cycle in the face of inflation. Today's report is expected to show that core CPI month on month is staying decently hot at 0.3%. Now, that kind of figure, if we annualize that, it does take us farther away from the Fed's 2% target. But a lot of the emphasis on today's print will be about any clues we can get from tariff pass-through. This is still something that is being debated by economists and the markets alike, whether we have already seen the tariff pass through and it's already in the data, or perhaps whether it is still yet to come. So eyes on goods inflation, especially those impacted by tariffs such as autos. Another thing to watch is housing rent inflation. There's been some high frequency data pointing that rents are softening. And given that the housing component makes up a majority of the core CPI figure, that could be something that could lead core CPI soft in the coming months. Lastly, Jumana, keep an eye on data quality. Now, while the September CPI report, the data was collected before the shutdown, we've seen an increasing a lack of good quality data into the CPI. Imputed CPI components are beginning to rise, and it's beginning to get the market to start thinking about the fact that we could essentially be skipping the next CPI print because of this shutdown, and that could have a lasting effect on the CPI print for months to come.
Yeah, something to bear in mind as we think about the long-term effects of this shutdown. But then later today as well, at around 8:15, we start getting these flash European PMIs. What is the expectation on that front, Val?
Well, there's really not a lot in the data that could move the dial, at least when it comes to expectations. We're still expecting to see German manufacturing stay in contraction, French services remaining in contraction as well. When it comes to the UK, there does look like there could be some upside when it comes to UK services. But essentially, we need to remind ourselves that this is the first economic activity indicators for the fourth quarter, and it does seem like activity is remaining subdued across the Eurozone. And it really does chime with what economists are now thinking about the ECB. There was a recent poll of economists done by Bloomberg saying that a majority of economists, Jumana, think that the ECB could be on hold not just for 1 year, but for 2, so through 2027. And that could really chime with the, lack of excitement in the data today that we're expecting. It could reinforce this view.
Yeah, well, data is always exciting. Bloomberg's Valerie Teitel, thank you so much for breaking it down for us on what to expect. Now, Nigel Farage, the leader of Reform UK, has suggested he would replace the Bank of England governor if he were to become Prime Minister. Farage has publicly criticized Andrew Bailey, describing him as dinosaur-like. He spoke to Bloomberg's Michelle Hussein.
Well, he's a nice enough bloke, but...
Would he keep his job if you were Prime Minister?
Well, he's had a good run. We might find someone new.
Really?
He's had a good run.
So you are signalling you'd be prepared to sack him?
I'm just saying...
This is shades of President Trump and the Federal Reserve.
If Andrew Bailey wants to get with the 21st century... And by the way, there's one encouraging thing, because I went to see him last month. He just put a limit on the number of stable coins any individual can hold. I said, Andrew, this is ridiculous. This is dinosaur-like, and within a week he changed it. So maybe he was listening, but the Bank of England, the British government, the regulator, whatever shape that takes, they've all got to understand that the world is changing, has changed very, very rapidly.
And you can listen to the full conversation between Michelle Hussein and Nigel Farage. Just search The Michelle Hussein Show wherever you get your podcasts. Binance co-founder Zhao has received a pardon from President Trump. Trump told reporters that he pardoned Zhao at the request of a lot of good people, though he's never met him. The move marks the latest act of clemency the White House has granted to a crypto entrepreneur, underscoring how the Trump administration has positioned itself as a friend of the industry. And speaking of, let's take a look at how Bitcoin has been doing over the course of the last few days. We are, well, right now, actually up again, up 2%, despite that pullback that we had earlier in the week for gold and Bitcoin. And Eric Trump says he has never been more certain about the future of cryptocurrencies. He's calling Bitcoin the key to global financial security and predicts prices could soar past $1 million. Trump says he's putting everything into the crypto space and is confident that digital assets are, quote, the way of the future.
I've never been more certain in my life. I'm putting everything into this venture and into cryptocurrencies in general. First of all, it makes sense because it's the way of the future. Second of all, the speed of growth of the industry is astronomical. Third of all, if you just look back 12 months. I mean, we're double the price in a 12-month period of time. People, cryptocurrency, people have a very short memory. In real estate, people have a very long memory. It's kind of amazing. You'll get to 125,000 and it'll draw back $10,000. And everybody goes, is this the end? And then guess what? 3 weeks later, it'll shoot up another 30%, and then it'll draw back another 5%, and then people do the same exercise again. No, it's remarkable. I mean, 2.5 years ago, I had friends yelling at me, "Hey, it's too expensive." It was $40,000. I go, guys, buy. And then they come to me when it's $80,000. It's too expensive. I say, guys, buy. And then they come to me when it's $120,000 and they say it's too expensive, and I say buy. And every single time I'm right. And by the way, these are small periods of time. So I've never been more bullish in my life. And when you're talking to the wealthiest families on earth, and when you're talking to the biggest sovereign wealth funds, and when you're talking to cities, and there's one not too far away from you guys, who literally take the excess power of an entire city during the winter when they don't need it to actually cool their commercial buildings and residential buildings, and they use that for Bitcoin mining, you better believe that this thing is going in the right direction. And it's been amazing to watch, and I'm really proud to be at the forefront of it.
Price target?
Oh, price target. I'm so sorry. Listen, Jamon, I've always said that I think it's going to go past $1 million in time. I mean, it's going to take a number of years to get there, but I think it's going to go past $1 million. This year, we'll see. We're going to have quantitative easing, obviously, in the United States, which is big. But listen, you have to look at it as a global asset. And what Bitcoin does is it gives security to all those people around the world that don't have security. If you live on the African continent, for the most part, you don't have security. If you live in Asia, for the most part, you don't have a whole lot of security, right? There's a lot of variables that could otherwise come and influence your money and make that money illiquid, make that money non-transferable. Same thing with South America. Bitcoin is the answer for all of those people. And, I've always said that I think we're going to be at $200,000 before we blink, whether it's the end of the year, whether it's first quarter next year. I think we're going to be at $200,000 very, very quickly.
Just to give a little bit of context there, that I had asked him to give me a target several times before, and he finally gave me a target in the end. That's why I was laughing. American Bitcoin co-founder and chief strategy officer, Eric Trump. Now, coming up, we'll be looking into Intel's earnings as its rosy outlook signals the comeback attempt is on track. Details of that next. This is Bloomberg. Intel shares posting big gains after the bell. That's as the chipmaker gave an upbeat forecast, boosting optimism around its comeback bid. Let's get more with Mandeep Singh, global head of technology research at Bloomberg Intelligence. So just walk us through the results. What did we learn yesterday from Intel?
Well, what we learned is this CEO is very much focused on improving the gross margins, fixing the cost structure. And even though the top line growth of 3% is nothing to be, really excited about, the path that they are taking is they're focusing on the areas that they deem have, a very strong growth path driven by AI. And that's where, Intel used to have about 65% of the PC market. They are seeing a resurgence in the AI PC market, and they expect that to be a big driver of 2026 top-line growth. So I think a combination of cost-cutting along with focusing on areas that are strategic to the AI opportunity.
Yeah, and of course, they've had a little bit of help along the way, the investment from the U.S. government, backing from NVIDIA, SoftBank as well. Looking ahead, what does this mean for where they're going to be focusing on in terms of strategic growth areas?
Yeah, look, and you're right. I think the investments from the government taking a stake and NVIDIA giving them $5 billion is a sign that, they are looking to form alliances when it comes to this big AI opportunity. At the same time, I think they really have to focus on avoiding losing market share to the likes of AMD and ARM for that matter. And, that's what will help Intel kind of maintain their share in PCs and also find opportunities related to the foundry side, which the U.S. government is really focused on in terms of onshoring, manufacturing of leading node chips in the U.S. And the only way you can do that is through Intel fabs. So to my mind, they have to land a big customer on the foundry side and also, make sure that they stabilize their market share versus AMD and ARM, which were clearly gaining market share from Intel in the past few quarters.
Yeah, a remarkable stock performance over the last couple of months. Stock up 90%, Intel. Mandeep Singh, global head of technology research at Bloomberg Intelligence. Thank you so much. Now to some other stories making news. Bloomberg has learned that banks are preparing to launch a record $38 billion debt offering to help fund data centers tied to Oracle. Our sources say JP Morgan and MUFG are leading the effort, which is split across two senior secured credit facilities. A $23 billion package is said to be aimed at financing a data center in Texas, while the other facility will help fund a project in Wisconsin. Well, we're going to talk our favorites, some of the charts we're looking at this week. Plenty more coming up. This is Bloomberg.
Ultimately, we saw progress and deals being made by the administration. I would expect that will continue to happen. There will be noise as the negotiations go back and forth, but I do believe this will settle. And I don't think 6-12 months from now, this will be on the front page.
Blackstone COO John Gray there. Well, one of the big focus for the markets this morning is that upcoming meeting between Trump and Xi next Thursday. And because of that, some of investors' nerves have been settled. Remember, if you see that tiny blip of the VIX, that was when a couple of Fridays ago, exactly 2 Fridays ago, President Trump put out that Truth Social post that was very critical of China and threatening another 100% tariffs. And since then, the tone has sort of backed off a little bit. And because of that, what you have seen is VIX come down, volatility around the index come down. Treasury yields also continue to move lower over the course of this week, trading below 4%. Of course, another factor in the market we've been watching as well is oil over the course of the last 24 hours, a massive bump upwards, up 5% for the price of oil. And just take a look at this, though. We had been trending lower and lower and lower from September, down about 13%, jumped 5% yesterday, but still some way away from getting back to $65. Here we're talking about TI. We're not talking about Brent, to get back to that level once again. So that just tells you that we've still got a long way to go in terms of the overhang of supply that people are expecting in the next couple of months and how it's going to weigh on the sector. And then finally, the big one today, we actually get U.S. CPI data. So Val was running us through what to watch here, maybe the tariff impact, also the quality of the data, rent, housing impact, all of those things are expected to show up today. But the expectation is that we will get a headline figure north of 3.1%. A core figure of 3.1% as well. So that's still a significantly higher than the Fed's 2% inflation target. So that is coming out later. Could be quite market moving. Bloomberg Terminal users can access these charts and others used throughout the show at GTV Go on the Bloomberg Terminal. And that is it for our show. The opening trade is coming up next. This is Bloomberg.